Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't. So let's get started. Oh my god, have you seen the stock market recently, guys? It's been nuts. If you're watching this video later on, just look back at any stock or just overall the stock market, the beginning of February in 2018, it's been nuts. It is officially considered a correction because like all stocks are down like around 10% now. I know the Dow is down 10%, so that's a correction. So I definitely had to do a stock market related video for this one. So in this video, I'm going over 5 mistakes that beginners in the stock market make. And stick around to the end because I actually have one more bonus mistake at the end, which is crucial to success in the stock market. So let's get into it. Right, so first mistake that beginners make in the stock market is not buying low and selling high. Now, I'm sure that you heard that saying whether you're a beginner or not. Even if you haven't heard that saying, it's pretty obvious that how you make money is when you buy something cheap and you sell it when it's at a higher price. Interestingly enough, a lot of people actually do not do this. So let me give you an example. And when I was a beginner as well, it just made sense to do this for whatever reason. But when a stock starts going up, right, whatever happens, maybe earnings come out or some type of good news comes out, the stock starts to go up. So a lot of people are like, well, it's going up, I should get in now, right? So let's say you follow that idea and you get in while it's going up. Well, then it starts going down and you see that you're starting to lose money. You're like, well, this isn't good, and then it continues to go down. You're like, this is definitely not good. So you sell. Well, what did you just do? You bought at a high point and sold at a low point, the exact opposite of what you're supposed to do. Now, yes, it may be difficult sometimes to buy low and to sell high because there could be a lot of things out there going on. There could be a bunch of news, and sometimes you have to buy when there's bad news out there. So you kind of have to go against your normal thinking and buy when things are low. So later you could sell things for high. The second mistake that a lot of beginners make is taking recommendations from other people. I know I did this a couple times when I started getting involved with stocks and all that stuff, but this is listening to, I don't care who they are. They could be your friends. They could be your family. They could be your boss. They could be some guy from a newsletter or on the news, and they're telling you, oh, this stock is a buy, you should get in it. Most of the time, this is a horrible thing to do. One is because we probably don't even know what that company is, and two, we didn't do our own research, and that's what we have to do, whether we like it or not, because it is easier to just listen to someone, but you have to do the research. See if it's a good company. See if it's increasing its revenues, its incomes, and all this financial information. You need to understand the actual company. You can't just buy something that you have no idea what's going on with it. And you have to realize if it's good for you. There's a bunch of people with different risk tolerances. A stock that I'm buying might not be a good idea for you to buy, and vice versa. A stock that you're buying might not be good for me. And it could be a straight up bad stock. One example, especially recently, it's not a stock, but Bitcoin. A lot of people were getting in it, mostly because everyone's talking about it, so it keeps going up and up and up. And recently, it crashed. It went down over 50%, guys. That's because people really didn't know what was going on. I felt like a bunch of people were getting in because other people were getting in. Now, whether Bitcoin is still the thing of the future, that's another topic I'm not getting into. But moving on to the third mistake that beginners make in the stock market, which is listening to the news. Kind of relating to the last mistake, basically don't listen to anyone. I think that's a pretty good idea. But a lot of times the news, or like CNBC, like the stock market information, they're like, oh, there's always bad news about a company, don't get in that. When that's usually the exact opposite what you should be doing. When a stock's going down, you should probably get into it. I've noticed that the news could either be like completely wrong, maybe like some bad news came out, right, and the stock dropped. But if you actually thought about why that was a drop, it was actually good news. An example, maybe a company bought another company, so obviously they used money for that. So that might see as a huge expense, their income was less for that quarter, so it drops. But realize that that's another business that could, for the future, increase its income and revenues and all that stuff. So in reality, that's a good thing. Another thing with the news and kind of people in general is that they just over-exaggerate everything. Sometimes if earnings comes out, it does worse than expected, but then it just rebounds the next day. It just doesn't make sense a lot of the time. So don't listen to anyone. Hell, you don't have to listen to me if you don't want to. Let me correct something. You can listen to people. It could be news, it could be other people, it could be me. But just do your research first before you make any moves. It's good to hear different stocks that people are talking about, but do your research before actually buying them. The fourth mistake that a lot of beginning investors make is timing the market, or trying to time the market. Timing the market is like very close to being an impossible task. Like even professionals in the field that have been in the market for decades, they still say, including Warren Buffett, say timing the market is very close to impossible. Just knowing exactly when to get in and exactly when to get out. Now, if you're slightly advanced, you would understand how to buy the dip. When stocks are down, that's when you get in. Obviously, you buy at the bottom. But when do you know it's the bottom? Here's the thing, you don't. If you look at the history and you look at the chart, you see there is a bottom, you're like, obviously buy there. No one knows when that is. Take now, for example. Now the market is just getting destroyed. Earlier in the week, there was a drop. People thought that might have been the bottom, and it rebounded a little bit, but then it dropped even more. So no one, this could be the bottom, it could not be. And also some people might think I'll sell now so I could buy in later at a lower price. And that's kind of a good idea, but a lot of times, we wait for the rebound or wait till it goes lower, and then it starts rebounding, and we're like, you don't know when to get in, so then you eventually get in at a higher price than when you sell. A strategy to avoid trying to realize when to get in, when to get out, is actually doing monthly contributions. Maybe if you have a 401k, money gets put in every week, or whenever you get paid. Or a Roth contribution, you put money in every single month. So overall, it goes up. And the fifth mistake people make is diversification. Big word, very simple. Basically, it's how many stocks you have. You could have 20 stocks or you could have 2 stocks. And there's a problem with both, actually. You shouldn't have 20 stocks because there's a lot of companies to keep an eye on, right? You want to at least partially understand what's going on with the companies that you own. And you simply don't have the time to research all those companies in depth. The exact opposite if you own 2 stocks. Well, guess what? If one of them goes down, that's still a hit to your portfolio. So a lot of people say to own kind of in between those two. Maybe like 5 to 10 stocks. So you have a good range. Or again, a little bit easier strategy is to invest into mutual funds or index funds. Those have hundreds of stocks in them. And it's very easy. You can do every single month. I partially have investments like that too. Now hold up, one last bonus mistake. So I guess that's number 6 mistake that people make in the stock market, especially beginners, is that they do nothing. This could be the most devastating mistake ever, guys, because yeah, the stock market could be scary. It could be fearful and just risk everywhere. But if you don't do or try something, you'll never know. The stock market has been increasing for decades now. And if you never get into it, you're not going to make that money. And that goes with anything. A good quote is, I don't know who said this, probably a bunch of people did, maybe Thomas Jefferson, but to obtain something that you never had before, you have to do something that you've never done before. So if stocks scare you, take a step back, look at the history, and realize that it's basically up. And that's basically it, guys. So if you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say, what mistakes you made. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because I believe that we could get a hold of our money and stop following the man. So thanks so much for watching, and I'll see you in the next one.